eventually quite clearly after our falling wedge break and the third and final pullback that occurred over there. Let's clean our face a bit first before we start drawing. See the chart, the eventual third low that was at 70, the second at 61, which was the final deepest low. You had a bit of a rounded bottom in that as well as a falling wedge. I think I covered this last time. And so you go, and so you go, and so you go. And what's since happened? Since that key break over there, which was one green candle, you've had a second green candle, a third green candle. That, believe it or not, is a fourth one, a fifth, a sixth, a seventh, and you are busy making your eighth green candle trading day since the breaking of the three impulse falling wedge, which saw us wait for the third sell-off that we described for you and has delivered an immaculate move, which should see you profiting immensely. You should be profiting immensely. Our community, of course, we had a little bit of an update on that and did it on the key morning. And we took the gift of that little continuation pattern to add a little bit more with leverage and on a really tighter stop. And our community members are deeply in on that, where they had missed out or where they wish to add to their prior and existing positions from earlier on the break of the wedge. 74, now you get in again at 79, and next thing you know, we're heading for 90, friends. We're heading for 90. Yeah, we're heading for 90. And again, this, everyone will tell you, rising wedges are only supposed to be down. Well, they can, but this has sure popped out. And you can sometimes also get a type 2, which can see you go out the top and then only down, or you can actually strip and run. So you don't always come down and break down as you have seen. We've already popped out the top. So it's at worst a type 2 setup where it will reverse later after going higher, and we don't know how much higher, or it does a runner and it keeps on going to the upside. Of course, Trump is talking to China, but it's not so much Trump, it's the retinue of people that have gone with him. All the corporate statists, the fascist unicorn company heads are all there. CEO, Lowell Finkelstein, right up front there. You guessed it, the likes of Facebook, Google, all of the CEOs and the schmuck faces of your impending grid, surveillance grid, where privacy is our greatest commodity that is being crushed, all off to China, all trying to do deals, all trying to agree, share technology, all discuss how to suppress the people at the cost to the larger benefit of state. You think they're enemies, they have a joint agenda controlling their people. They will coo and and be real impressed with the Chinese biometric state. Indeed, they shall. Indeed, they shall. The gold-silver ratio. The gold-silver ratio. That's right, the gold-silver ratio, he said. What does the gold-silver ratio tells you? Well, you see, we have a tool that you don't have, and we'll give you a little clue about it. That's called the inverted HVF on the gold-silver ratio. It's the one we thought could even be up. Remember? Hey, we were wrong about that. My favorite mistake. It's made me 2.5 bar in a single account, not to include all my other trading accounts. Probably made me, since this move started, a substantial sum. And it's not about that. It's what it could be doing for you. We don't come here to brag. It's what it could be doing for you that you're not getting done. That you're not getting done because you don't want to be saved. Some of you do. Some of you want the wisdom that goes with HVF method. Well, the gold-silver ratio will provide a downside target where silver will probably, after running that, remember that warning on the second interim on the macro silver? Do you remember it? So after you've run the 95 stroke to the 103 range, you're going to have a pullback at the second interim. Remember that stuff. That's the bit that bit you. If you were part of the guys that got leveraged, didn't understand stop losses, didn't have any targets, just jumped in, that inverted your pyramid with extra sizing as you got more confident, the more it went up. You know, all that stuff, that's the bit we're talking about. Well, that same inverted HVF is suggesting to us that you're going to continue to run hard on the gold-silver ratio, and you'll get a second interim coming soon, not too soon, 49.5, but it might come quickly, it might come slowly, I don't know. But you see how you've got red, 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 red. That's a lot of reds on the relative valuation of gold to silver. On the relative valuation, when you run the 50, yes, let's go and put some lines on. Hey, fancy that. He's got a 50 line on. Key levels of significance. Chapter number 1, HVF method. One of the first things you will learn, the law of round numbers. Yup. Watched and recorded to a high standard. Many people, when they join our community, go look the link to the side below. Discover how seriously and how well we have recorded with PowerPoints, annotations, moving illustrations on real charts, entertaining, great audio, high quality, can watch at multiple speeds, so you can rip through it when you're getting it, and you can slow down when you need to slow down with comments and interaction. That's right, 50 coming up, and our interim is just past it. Typical law of key levels of significance, just run. You run through things that are significant, because as you get to the significant part, there's no orders. Typical when you get to the significant part, and then suddenly there's a swathe of orders normally at the round number. Nobody puts anything for sale at $9.99. We're not talking about the supermarkets now with their clever trickery on pricing. It's a $10. It's a $10 item. Then you smash through it, because as you hit $10, a whole swathe of orders go through. That's what's going to happen. You're going to run 49.598, and then you will probably have some form of reaction where silver slows down a bit and maybe even pulls back hard, and gold pulls back less, or gold starts just going up faster. Then you do that or some other form of continuation pattern before you run, wait for it, on this particular chart, 36. Now, I'll have you know, on others, I'm getting 32. And whether you're looking at 36.4 for the relative valuation of silver to gold, or you look at 32, they're both lower than this number. This has been the lowest number for a lengthy period that triggered our head and shoulder. Who's been following us on the gold-silver ratio for many days, weeks, months, and years? The macro head and shoulder that eventually broke out of the transgender pink stall box. Remember that? That saw us say at 75, that's the beginning of the downside. Gold-silver ratio at 75, that's the beginning of the downside. We are now really getting serious on this move. What was that low? The low here was 43, and now you're going to run into the 30s, as potentially as low as 32, where I've taken the gold-silver price and actually divided them by each other. The silver ratio here has a slightly different chart, slightly different data, and I get a 32, which is even lower than that. It puts a price over here. It was Gandhi who in 67 said, don't buy gold. In the next 13 years, 67, let's get an idea where gold was in 67. It was June the 6th. It's not that far from being the anniversary, actually. The anniversary of Gandhi's great statement in 1967. It'll be 40 plus 20. It'll be almost 60-year anniversary. We're, of course, 26, not 27. So it'll be the 59-year anniversary. Let's go and see how her advice turned out and what particularly happened as an indicator during that particular time. So if we go and have a look at gold, right down in 1967, we've got to go back, round about here. Isn't that lovely? We're getting to the bottom of this. Here's your facts. There's 67, folks. What happened round about then when Gandhi said, you're doing harm, mid-year of 67, by the way. We can do this a little better. We can use the go-to and say, June, please. Give us June, and we'll go, why don't we just go 0606? You know how they love them sixes. And we want 67 here. 1967. It's quite some time ago. Take me to the promised land. 1967. Bang. There you go. What happened next, friends? Let's have a little look. See if you can help me with this one. That's where you were. That's where you were. And that's what happened next. Yes, there were some downsides, and there was some very, very juicy upsides. Continuation pattern, falling wedge, up, minor pullback there, up, blow off, 1979 into the 1980 highs. So to summarize, in the 13 years, let's put a percent on that. How was that for investment advice? Did it stop the rupee from going down? No, it didn't. No, it didn't. No, it didn't. And in that amount of time, let's just make sure we got our lock on there. Let's get our lock on. In that amount of time, that's what happened. You went up in the 13 years from when that article ran, you went up 2,389%. So just to be clear, 100% means you've doubled. So essentially, that is 24.89 times. Let's say 25, shall we? Let's just go with 25. 25 times your money went up in a 13-year period. 25 times in a 13-year period. That's in gold dollar terms. It is not in the rupee terms if you happen to be an Indian in the rupees. And I'm guessing, you know what? It went up even more. It went up even more in the Indian rupee. I'm just guessing. Who knows? Hey, you'd take 25 times, wouldn't you? 25 times your money. Well, that's quite spectacular. And here's the difference between Modi and Gandhi. Gandhi got you 25x. Modi, now here's the thing. I think he's going to get you somewhere between 100 and 250x. That's what I think he's going to get you in terms of the fiat. In short, I'm saying he's going to do 4 times better